Axel, we're talking a little bit about the banking industry. We mentioned Brexit. What do you think will be the overarching theme here in Davos? There's a wave of populism. I don't know whether that means that central banks will have to rethink about some of their policies, and we need to focus much more on structural but also fiscal policy. This is something that Mario Draghi has been asking for as long as I can remember, and yet nothing really has been done. Will it change?
It will change first and foremost in the US. I think it's pretty clear that the government will do some fiscal reforms. They will reduce tax rates. They will do some structural reforms. They will invest into the US infrastructure. So you'll see more fiscal and structural in the US. And as a result, the Federal Reserve can pull back further. The Fed always takes the rest of the economy and other policies into account. And so with more stimulus from fiscal and structural, they're going to need less stimulus from monetary. That rebalancing is happening because the action is taken by government rather than the central bank. I don't see a similar adjustment in Europe. Mario Draghi already tied the hands of the ECB for the entire year. So he wanted to stay away from the election. So he said, look, I've delivered for the whole year. Yeah. Don't ask me for any additional work unless the economy really turns bad. And so in Europe, it is really up to governments to do their job. And Europe is facing deep political problems. We started a bit talking about Brexit. There are all the elections that are going to happen in the major 5 countries. Spain has had a long, tedious process of several elections to get to a government. So politics is going to dominate the economy for most of this year. And you've seen it with Brexit and the US election. Politics can be volatile. It's very hard to predict political outcomes. Markets are used to discounting and trading risk, hedging it, but markets are not good at predicting political outcomes. So politics will be at the forefront of what drives the world economy.
So actually, how does it play out? Does it play out on currencies? Does it mean that we're going to see a lot more volatility on currencies? And if you play divergence, so the Federal Reserve hiking, the rest of the world not, does it mean dollar strength, and therefore does it hurt, the funding of the US?
No, so I don't think it will play out by the Fed continuing to hike, because basically that would mean the US economy would completely decouple from the rest of the world.
Right.
That's a big myth. The world is more coupled and more in it together than they ever were. So at some point, whilst the Fed will probably do 2 to 3 rate hikes this year, at some point that's going to have an impact on the Fed raising rates further. And it also
because what, a dollar strength?
Because the dollar will continue to be strong, and I think you also will see that the whole question on what will happen to currencies will depend not just on what happens to monetary and the other policies. It also happens to depend on the trade side. So if we're seeing more trade dispute, if we're really seeing the reintroduction of tariffs, that can have a big impact on the world's ultimate consumer, which is the US citizen, and the world's ultimate producer, which is China. If we see any repercussions in those Sino-American relationships, we're going to see some problems.
But that's a political risk.
It's a political risk.
And so if you're a market, what are the chances, again, what do you bet, that it's a 25% chance that there's a big trade war between the US and China?
No, I don't think there is a risk that there is a trade war, but we will see some continued difficulties between these countries till the dust settles after the election. There is a major leadership changeover happening in China. President of Chinese People's Republic is here in Davos as well, so he's going to talk about their agenda. They're actually internationalizing. They're being responsible and are starting to work with their Asian partners on more trade in the region. And, what will happen is if the US and Asian relationships turn worse, then you're going to see Europe and Asia develop better relationships, because we're in a global economy, and the Chinese producers can turn to many areas. The Europeans, if they get more market access problems in the US, and we heard some problems from BMW and the American governments yesterday, they're going to look for Asia as an alternative, and that's always been the case.
And so is that the message? Is Xi Jinping, the Chinese president, showing up in Davos for the first time ever, actually, that we're seeing a Chinese president to almost pitch for business?
Well, first, I've been in China for the whole week. We just had our largest conference there, Greater China Conference. The first message is the Chinese are very self-confident now that they've really emerged as the second largest world economy. Second, their dynamics will not just depend on US or European relationship. They're increasingly integrating in the region and are working with their partners in Asia. So Asia is developing as a trading and as a financial center more and more. Look at the Shanghai-Hong Kong Stock Connect. It's a very important gateway into the Chinese market. They're developing Chinese bond markets. There will be an equivalent of a bond connect. So China is opening up. China is deepening its markets. And
with trouble as well, right? I mean, they still have this trilemma where the reserves are down, outflows are continuing, and renminbi's down. So how do you stabilize it? And
so basically the Chinese problem is not that they want a stronger renminbi. Actually, the opposite is true. They quite fear that once they sail past 7, the exchange rate of 7.0, that they might lose some confidence. They're looking at their 3 trillion foreign exchange as something where they need part of that to clean up the banking banking system and some of the problems in the financial markets. So the real estate markets have really started to correct again downward. The equity market was very volatile. So China is looking to stability. Both stability in its foreign relations and stability domestically in financial markets. And I think they have the tools to achieve that. They can use monetary policy and they can use fiscal policy to really get the economy going. And my expectation is if they lose some momentum on the non-domestic side through exports, they're no longer as dependent on export as they were 10 years ago. So they rebalanced, and if they need to stimulate more domestically, they will do that. But in the end, most of what we will see in Asia is further integration in Asia, like we've seen it in the North American free trade zone, like we've seen it in the European environment. Asia's going to do the same. Asia is going to, in itself, become a more dynamic, interlinked economy.
And Axel, overall, are you more optimistic about 2017 than you were 2016? So 2016, we had huge, populist surprises, but it's the first time, and we're talking about this during the break, that the IMF actually did not downgrade the world forecast, and this came out yesterday.
Absolutely. For the last 5 years, the IMF always did. I'm actually quite optimistic for this year. Usually when I come to Davos, I find everyone is too optimistic. Yeah. This time around, I think the mood is a bit too gloomy. The world economy, 10 years after the crisis, has stabilized. President Obama found a deeply dysfunctional financial system and a deeply in problem economy when he came into office. President Trump finds most of the wounds from the financial crisis healed. He finds a more dynamic labor market. He finds an unemployment rate that is almost at equilibrium. So there's very little that they need to additionally do to get the economy from strength to strength. But there are risks. If they refocus away from the economy to geopolitics, and if there is some escalation of international conflicts, it's going to be negative.
But isn't this what the electorate almost wants, right? It's the anti-globalization movement, and I don't know whether this is how you see it. And that means that we start from scratch in actually looking at world trade and what globalization actually gave to the people of the world, the advanced economies.
No, I don't think that's true, because what people want is they want to consume cheap consumer products, they want to consume cheap consumer electronics, they want to drive fancy cars, and that's one side. And it's great, but then at the same time to tell German car manufacturers, Korean TV producers and Chinese producers of toys that these toys are no longer wanted in these economies, it's just the opposite of that. So I think we have to accept that globalization has two sides. The first one is it's to everyone's benefit, and that's the one thing we know in economics. Trade of goods and services is to everyone's benefit. Unwinding that and producing some setbacks on that is going to impact negatively on the economy. So I hope everyone sort of starts realizing that and works together. I think the chances here in Davos are that if people are here, they look at the year ahead. And I think this year they're going to see more chances going ahead, maybe more than the previous years. But we shouldn't fool ourselves. There are risks out there, and we need to manage the risks in order to be able to gain the opportunities.
Because inauguration's on Friday, what's the biggest risk coming out of the Donald Trump presidency?
I think a risk I see is that many of the things that have been talked about would actually be implemented. My hope is that...
So what, walls and trade wars?
Well, some of the sort of more inward-looking behavior of the U.S. Look at us at UBS. I mean, we have about 20,000 people in the U.S. We're in 300 locations. So in our U.S. operations, we're a U.S. bank. We don't need market access from Europe to offer our services in the U.S. We are on the ground, and a third of UBS is a U.S. bank. We're actually larger than Goldman Sachs in the U.S. So for us, what will depend is that we can move capital within the group freely around between Europe, Asia, and America. And our U.S. business, which has been established a long time ago, it needs to be part of the global franchise we have. So reducing the global footprint of global companies, I think, would be to the detriment of everyone.